Good morning, everybody. Welcome to the 21st Emerging Growth Conference. I'm Anna Berry, and I'll be your host today. So as always, we have an exciting list of companies in a wide range of growth sectors presenting to you today. Now, all of our conferences are uploaded to the Emerging Growth Conference YouTube channel. So subscribe at youtube.com/Emerging Growth Conference. Now, during each company's presentation, you can submit questions through the webinar module. Now, the presenters may attempt to address as many of these as possible at the end of their presentation. So just a few notes for those attending. It's a live continuous event. It begins now and it runs until 3:30 p.m. Eastern Time. So when we switch to the next company, you'll see a black screen for a brief moment, but don't go anywhere. It's just us moving over to the next presenter. Now, if you do experience downtime for more than a minute or two, just refresh your browser and everything should work properly again. Our platform does work best on Google Chrome. So if you're watching from an Apple device, you have to hit the play button to start the session. One last note. After today's event, you'll be redirected to the registration page for the next conference in January. So please stay on or come back to secure your spot early. Today, we have 12 companies presenting. So without further ado, I will introduce our first. We have LiveToBeHappy, Inc. It trades on the OTC Pink sheets under the symbol CAVR, soon to be LTBH, and is a land developer and community home builder in the Southern U.S. with a differentiating technology marketing platform. So attendees, please submit all your questions for LiveToBeHappy through this webinar module, and let's welcome LiveToBeHappy's CEO, Kevin Cox. Welcome, Kevin.
Good morning.
Good morning to you.
We'll go ahead and get started. I'm excited to present. I appreciate the opportunity.
The floor is yours, Kevin.
Fantastic. So as we go through the slides here, a couple of cautionary statements, of course, have to make these that anything we talk about that's forward-looking needs to be thought through. It is forward-looking. It's not a guarantee. And of course, we do use some terms such as EBITDA, which I'll explain why, that are non-GAAP terms. So we'll clear through that. Now we can go on to who we are. So I often get asked the question, Live to be Happy, what is that? And why are you named Live to be Happy? Well, I want to start off by answering that question with who are we? So we are a company that is a holding company. We invest in brands that align with our mission. And our mission is pretty straightforward. We build lives, not just places to live. Building lives is important. Building places to live is important. You'll see as we go through our presentation that the real estate sector is our largest sector from a holding company perspective with respect to revenue and EBITDA. But it's very important that everybody understand building places to live is not the only part of what we do. We want to build lives. And Live to be Happy, we believe, is aptly named in this day and age for what everyone is seeking to do. And that is to find some form of happiness in where they live and in their lives in general. So we felt like it was an ideal name for our parent company. So what we do is we identify and acquire undervalued revenue-generating companies and products. Then we professionally manage them. Then we build the brands. We build these companies' products into strong brands. And in doing so, we deliver tremendous above market value. So there are a couple of key things that have to be done to be successful over the long term in a venture like this. First, you've got to buy the companies and the product lines. You've got to buy them right. That means they're undervalued. They're underappreciated. They may be coming out of as in this case, out of a poorly performing pandemic trend, but you buy the companies right. Second, you have to design a strategy, and it could be a transformation strategy, it could be a turnaround strategy, it could be a growth strategy, it could be a rehabilitation strategy. You have to design a strategy. Once you've designed the strategy, then you have to go about promoting and building the brand. And in building the brands of these companies, again, they're undervalued when we bring them on. We put a strategy together, and then as we build the brands, we build recognition and execute on promotion. So putting those things together is great, but you have to execute on the strategy itself. And these can't be a 1 month or 2 month strategy. These need to be 1 year, 2 year, 5 year strategies. So you've got to execute on those strategies, and you've got to take a long view in doing that. Then fourth, you can't waver from the strategy, and you have to stay focused on the long term. In each of these cases, you're buying undervalued assets, which means there are some difficulties or problems that were with them, or they're not recognized, or they're not seen as industry leaders, or there's something about them that you can build on, right? But of course, that means they'll come with some chinks in the armor that you have to work out. So as you're working through those issues, it's incredibly important to stay focused on the long term. You can't waver from the strategy. And then finally, once you've bought them correctly, once you've designed a strategy, you've built the brand, you've executed on your strategy, you've stayed focused on the long term, you've overcome obstacles that have come up, then you're able to really reap the reward. And the reward for us and for our shareholders is in the form of cash production, so generating consistent and reliable cash, or value enhancement. So you take a brand, you clean it up, you transform it, you build it, you execute on the strategy, and then you may turn around and divest that brand for a sizable return. So again, we build companies and products into strong brands to deliver above market value, but we do so centered on our mission. We're a mission-oriented company. We build lives, not just places to live. But one of the key aspects to making that happen is the team that you put together. But before I get into the team, I just want to go through the sectors that we're concentrating on. So sector number one is real estate. We'll talk about each of these sectors in a minute. The second is business services. The third is health and wellness. The fourth is education. And the fifth is travel and entertainment. So again, we'll buy undervalued assets in each of these sectors. We'll put a strategy in place. We'll build and promote the brands. We'll focus on the long term. We'll overcome obstacles, and we'll reap the rewards in each of the sectors. On a go-forward basis, starting in 2022, we'll begin to report results on a sector-by-sector basis. So I want to talk about the team. We've spent the last 7 months putting together, first of all, a list of target companies, determining which companies we can buy that we can buy right, clean up, turn around, and build. But we've done a number of foundational items. The first foundational item, and the most critical in my opinion, are the people that you surround yourselves with, the executive team. So we have a diverse executive team. So I'm going to start out. Of course, I'm Kevin Vincent Cox. This is my third roll-up strategy. I have lots of experience in merger and acquisitions. I've got a JD, an MBA, executive training at Harvard, and I spent a great deal of time at UPS in their strategy team, working a couple of subsidiaries of them. And in that effort, we actually did exactly what I'm talking about. They purchased at the right price. They purchased an undervalued brand, and we built it up. And we built it into a monster in the industry. And so now we just do that for other companies. So that's me. I'm thrilled to have Grant Edwards as our Chief Financial Officer. Grant has 20 years of experience in SEC reporting, spent time as a corporate controller. We'll get into more of what he's doing in terms of helping us lead the Trudent brand. But he's got a tremendous amount of experience, incredible person to be around, manages an inordinate amount of information, and does so with a smile. So thrilled to have him on the team. Russ Senecary. Russ Senecary is our Chief Operating Officer. He's the backbone, the core of our team, especially on the real estate sector, leading the real estate team. A gentleman who is immensely focused on tasks and getting things done, but not in an old school dictatorial autocratic style kind of way. He gets things done. He reminds people when things need to be done. He makes sure the trains run on time, but he doesn't bury you in the process. thrilled to have Bob Silver, who was the one who was most instrumental in my decision to come over and put this together with the CAVR. Bob's the executive chairman, chief innovation officer. You will probably not find somebody better at promotion. He's probably the best marketing mind that I've worked around, and I've worked around a lot of them over my 20 years, and a brilliant creator and inventor. We'll talk more about the stuff that he's leading here in a second. And then Mike Murphy. Mike is our chief technology officer. Mike does a fantastic job at making sure that whatever we build and whatever company we have, number one is cyber secure, number two is done right, number three can scale. One of the worst things that can happen is you build a brand, you build technology around that brand, but the technology can't scale and it fails under load because of your success. Mike ensures that doesn't happen. In addition, on our executive team, introduce a couple of other presidents. We have Dr. Toy Hirschman, who's going to be president of Growing Together Academy and AV Rover. Darren Tarver is going to be president of Drip Fitness, and Dr. Stephanie Christner, who's going to be the medical director and our health and wellness lead. So let's get into our sectors and our sections and where we're at. So let's start with real estate. So real estate is the backbone in terms of revenue and EBITDA to the firm today. Senecary Builders delivered $2.7 million in trailing 12-month EBITDA as of 9/30. It's a significant growth, 70% revenue growth, EBITDA growth as well. We have two other firms under letter of intent. We've been engaged in diligence and fundraising to put these deals together. Things remain on track to put these together in the first quarter. Deals of this size take time. We certainly had hoped to close earlier, but it takes time, especially to buy right, make sure you've got the strategy, execute on the funding, do so in a non-dilutive way, or at least obtrusive way to shareholders. Combined, you'll see each of these companies combined have over 10 million in EBITDA. I want to talk a little bit about Senecary Builders in particular. So with Senecary Builders, we've got several projects in process. So we've built, this is in the Charlotte, North Carolina, several subdivisions, multifamily, single family custom homes. Also, we've launched and are starting to build large structures, expected to be complete in 2023 is the Gordon Street property. You'll have to forgive me where it says expected completion of the Smith Street property in 2022. It meant expected to kick off and actually engage in the start of the construction process in 2022. There are a number of other buildings in the queue that we will be talking about in the next and announcing in the next several months. Going on, that's on the real estate side. I do want to say one last thing about the real estate side. Where we're focused is in the Southeast, and particularly in all of the Gulf states. So if you follow Texas along the Gulf through the Atlantic Ocean up to Carolina, that's where we anticipate focusing our growth effort. So our business services sector, we've acquired a couple of companies and launched these efforts. So I want to talk a little bit about post-bid ship. So supply chain and logistics is a hot space right now. Again, going back to our strategy, you have to be able to buy it right, which we believe we did here. Some of post-bid ship's competitors recently received funding and valuations north of $100 million. We've put together a 7-point strategy. We've started executing on that strategy, and in executing on that strategy, we're already seeing results. One example, we had a customer jump in, and in doing so, no touch points with us, no physical touch points. The customer went to the site, logged onto the site, set themselves up on the site, went through the process, posted a load, saved $1,800 on that load, charged the credit, put the credit card in our system, and we charged them our fee, again, without any actual touch points from us. So we plan to see that grow. Truden Executive Services, thrilled to have that. They're focused very heavily in the marketplace. Staffing is a critical need in the community today. I'm excited to have Grant Edwards leading that. Mike Murphy leads post-bid ship. I'm going to jump into health and wellness. On the health and wellness side, we have recently acquired Renew You. This is a group, again, we bought right. They've got potential for growth. We are going to build a franchise. If you look at just a single location delivered over 1.2 million in revenue and 265,000 in EBITDA. That's the perfect dollar amount based on our research for a franchisable model. We see tremendous growth. We've built a good strategy. And with Bob on the promotion side, we see the opportunity to see this brand grow immensely over the next several years. It fits squarely in our building lives aspect of our mission as well. So the Drip Climber, this is a product that we anticipate receiving patent approval on. We know of a number of patent infringers that we will be able to go after as soon as that patent's issued. I hope to have an announcement soon. This we'll be making an announcement on as well, although I'm announcing it today officially. We have signed on to the Drip Bike, and what this is we have a patented exclusive license on a patented product here that we're gonna push to market. That's designed by a physical therapist with the idea of creating a cardiovascular routine and exercise for people with bad backs or injuries. One of the difficulties for a lot of these individuals, of course, is that they can't get cardiovascular exercise without hurting or re-injuring their backs. This is a patented solution to that program. Moving on to education. I'm thrilled about education with Growing Together Academy. Here again, we're going to be offering a summer school program. We have done quite a bit of work in this area. Dr. Toy Hirschman's put curriculum together. We have Bob Silver as the producer. Thrilled to have this rolling out. You'll see a lot more about that in the next couple months. One of the things when you have a brand like Growing Together Academy and you're trying to build it and push it into school systems is to actually have contracts with the school systems. So I'm thrilled to announce today that we've reached a definitive agreement with AV Rover. They're a well-known supplier to school systems, have been around a number of years. They provide equipment to allow schools to do 3D visual presentations in the public school system and the private school system. So the two of those together, Dr. Toy Hirschman will be president of, and again, we've got Bob Silver as the promoter. We have another company under LOI. Excited about this. They're in the education space as well, much more so in webinars, seminars, and hosting online education for universities. I'll be talking about more of that in the next couple months as well. When I get to travel and entertainment, in this sector, I'm excited. Today, we're announcing the acquisition of Canary Travel. Again, go back to our model. We buy right. We design a strategy for growth. We build the brand. We execute. We overcome obstacles. We reap the rewards. So travel has been hit hard over the last 2 years with the pandemic. But you'll see in most reporting that with travel, we anticipate significant growth. We're going to be able to take advantage of that growth. Soku, we are continuing to round Soku out. We have a lot of work that's been put into it and a lot more work to be done. You'll be hearing more about that in the next 6 months. So when I put all the pieces together, you'll see we project quite a bit of growth. We've got we're poised to build these brands. We're poised to grow the company. But what I'm most excited to talk about is I want to finish here with this piece, and that is in 2019, CAVR had $0 in revenue and lost $90,000. So they had zero revenue, $90,000 negative of EBITDA. You fast forward, and here we are at the end of 2021, and we're sitting on trailing 12 months of 2.7 million of EBITDA and around 15 million in total revenue. That's phenomenal growth. And that was with one company that was acquiring Senecary, and under Russ and Bob's leadership, beginning to build that brand. So you will see a layering effect when we complete the acquisition. So we've now done 5 of 7 projected acquisitions or announced acquisitions. None of those, other than Senecary Builders, is in the 2021 financials. So when we put all of this together, we're talking about a growth story that generally is unheard of, certainly in the pink sheets. We're in the process of reducing the float through buybacks. We're in the process of uplisting. We've put together an audit committee. We're selecting an audit chairman. We've hit all of the qualifying marks to uplist to QB. And with that, we anticipate reducing the float, uplisting, closing on these acquisitions in 2022, and seeing a phenomenal growth strategy and growth history starting from nothing in 2019. Wait till you see what we do in 2024. With that, I'm certainly would entertain any questions.
Great presentation. Thank you so much, Kevin. Yes, we've got lots of questions. Let's dive right in. Dwight F. asks, so the land and building development business is very capital intensive. In order to be successful, there needs to be ready access to low cost capital. Do you have these relationships in place? And can you expand on what sort of leverage you can get and what your potential carrying cost of capital are?
Absolutely. On the real estate side, it is extremely capital intensive. Right now, the market favors leverage because interest rates are low and inflation is rising. It's a perfect time to borrow, but that's not our long-term strategy. So I'm going to answer the question in 2 pieces. First, I'm going to say, yes, we've got relationships that will give us access to the capital required to do these projects. That was point 1 of the question. The second part of the question really goes to what's our long-term play. Our long-term play here is pretty straightforward. Our long-term play is we're going to close we're going to borrow now, and then we're going to turn around and we'll leverage the capital markets in the future to pay off that leverage and make further acquisitions where it makes sense.
All right. Thank you for that. Phil Welch says, it looks like Renew U is going to get turned into a franchise model. How many franchises do you think you can sell in the next 2 years after the franchise is established?
So I love questions like that. How many? Okay, I'll tell you our goal. I won't tell you, I can't guarantee, going back to the cautionary statements, what we're going to do, right? Our goal is to put 100 locations in the next 24 months. Okay, I'll let everybody kind of do the math. Can I guarantee that we'll get 100 locations in the next 24 months? Of course not. I have some dependencies. I've got to register the franchise disclosure document. I got to register with the FTC. We got to go through that process. I got to find master franchisors and then launch. I can tell you once we launch, we'll go fast.
Great. John Clayton asks, what's the status of the uplisting to QB and the name change to LBTH?
So the name change was recently approved. We got the CUSIP, the QSIP. We are waiting on FINRA's approval for the symbol change to LTBH. As far as uplisting, we have the last 2 pieces was getting the audit completed, which we expect to have completed in the next 2 weeks. Again, cautionary statements, that's our plan. Can't guarantee it, but it looks good. And the second was having independent directors with an audit committee and an audit chair. Those we expect to finish by the end of this year as well. So our goal, apply for uplist, then you have to wait for the OTC to check the boxes, sign off on it, and you're ready to go.
Great. From Jan Bryant, last year, Bob Silver explained how the drip machine had a patent for a belt drive. There is an outfit out of Denver called Climber, and it has 10 fitness centers, and it has a whole business model around a Climber type machine, similar to the drip that appears to have a belt drive. They have a who's who of wealthy investors behind them, like Chad Hurley, the YouTube co-founder. Have they been approached?
So as a lawyer, businessman, and strategist, there is a methodology for going after groups that are infringing on your IP. At ConnectShip, I executed that strategy with Pitney Bowes, who was a heavyweight when it came to enforcement of IP, and I won. That's all I'm going to say.
Okay. Jeremy Wade says, on Twitter, you mentioned 2 of 7 acquisitions. What were the terms of the deal with respect to cash or stock or a combo of both? And how do you plan to fund these other acquisitions? And will it ultimately lead to debt, or is debt off limits for you?
So the first 5 acquisitions that we've done were debt-free. The second 2, which are the largest, will involve debt. Again, debt makes sense when interest rates are low and inflation is high. So it's a perfect time to do it. Now, I have, again, cautionary statement, forward looking, can't promise it. And it's not because it's a catchy phrase, but my goal is for our company to be debt free in 23. And we'll leverage the capital markets to do it.
Great. Ramon Cruz says the stock has been under recent selling pressure despite positive acquisition news, new management, and no increase in the number of shares. That can mean only one thing. A longtime shareholder decided to exit. Can you confirm if this selling appears to be from the same source? And has current management sold any shares or have an intention of doing that in the future?
Great questions, multiple questions wrapped up in one, of course. Yes. I can tell you I have no intention in selling. In fact, I've been putting money in. The price is perfect. That said, yes, when you go from 0 or minus 90,000 in EBITDA in 2019, you then issue stock, people buy into the idea, then the stock goes to 6 cents or 5.5 cents. You're going to have some people who, when their 12-month restriction expires, sell off. They lock in their profits, and that's what we've seen. Wait till you see what happens for those who bought it the low point of 2.5, and the profit they're going to make in the next 12 to 18 months.
Good answer. Okay. Peg C says, with respect to future acquisitions, is there some sort of multiple to revenue or earnings that you prefer to hit?
Not necessarily. Again, buying right to me is not just numbers. That's what most private equity firms do. They go in, they buy the number, they hack the company off, they, in most cases, destroy it, they get a great EBITDA, they sell it for a new multiple, and the next private equity firm's left holding the bag. That's not what we do. I don't have a multiple formula. My formula is based on, can we buy it right? Can we get a strategy around it? What's the growth potential? How are we going to build the brand, and what's the final reward going to be? So I take an internal rate of return approach, an MIRR approach to acquisitions, not a multiple approach.
Julio Harmon says the share count really expanded on the restricted side. Are there any plans to roll back some of these issuances in exchange for preferred stock?
We do have plans. We have plans to fund acquisitions through equity, of course. We also have plans to, and I think we'll see more shares go from unrestricted to restricted. That's all I can say.
Wayne K asks, how are you currently diversified as a percentage basis in each sector?
Well, right now, because our first major acquisition was real estate, today we're heavily weighted on the real estate sector. Our goal, of course, is to diversify. Our goal is to, we'll always probably have a high weight there on the revenue side, but our goal is to see EBITDA growth split evenly amongst the different sectors over time.
Great. Well, Kevin, we do have more questions for you, but we are out of time to keep this conference running on time. We do ask the hard questions here, so we hope that you come back and join us again on our conference. And thank you for your time and presentation.
Thank you so much. I appreciate it.
All right, everyone, stay with us as we transition to the next presenter. We'll be right back.